We just wait for it to go live on YouTube and then we go.
Welcome everyone to NAAIM Confidential Live.
Awesome. Hey, well, welcome to NAAIM Confidential. I'm this week's host, Ryan Redfern. Today we have Dexter Lyons, manager of the Issachar Fund, LIONX, the LionX Fund, which he launched in 2014. And then in June 2019, he transitioned it to be a BRI fund, which is a biblically responsible investing. So we're going to talk about running a fund, what BRI investing is, what it entails, some of his investment process, which I think is pretty cool. He's kind of in that O'Neill school of thinking, as well as just risk management. I think it's a way you deal with that inside of a mutual fund versus doing SMAs, doing money management for regular clients. So before we get into that, I'm going to dive into the NAAIM Sentiment Index, which was down a bit this week. Should be sharing. There we go. Down to 49, lowest it's been in a while, and that makes a lot of sense because I mean there's a lot of fear in the market. You know, managers are now stepping up and getting out of the market and playing it safe. So I know Dexter does not contribute to this thing, and that is about where we were. I think it was probably around the 60s this week. But yeah, it's a risk-off week. So we're gonna talk a bit about that as well. So that's good there. All right, and before we talk to Dexter, he's got some compliance issues I've got to read about. So he manages a fund, so he's going to deal with some different compliance. So I have to note that investors should carefully consider their investment objectives, risks, charges, and expenses of the Issachar Fund. This and other important information about the fund are contained in the prospectus. You can get it by calling 866-787-8355 or visiting issacharfund.com, and the prospectus should be read carefully before investing. So now Dexter's compliance people should be happy. Thanks for being here today, Dexter. Good to see you, man.
Great to be here. Great to be here, Ryan. Thank you.
Awesome. Well, let's start about what it's like to manage a mutual fund. I think that's something that not a lot of people venture into, and you wonder about it. I mean, you see them, you hear about them, but you know, what does it take? What's it like? What's your life like?
Well, good question. I started back in 1990 managing SMA, separately managed accounts at Schwab and Fidelity. And me and my partner, we were blessed and got a lot of assets under management because back then I was timing junk bond funds in and out. And one of the wholesalers came to us from Potomac Funds and said, hey, why don't you take all these individual accounts and put them into a mutual fund? And like, okay, well, how do I do that? Well, don't worry about it. We'll take care of all the details for you. We'll just, all you got to do is make all the decisions and we'll take care of everything else. So we did that. And that went very well. And then about in 2014, my partner wanted to get out of the business. So I basically bought him out for $1. And I basically launched the Issachar Fund because that's what I wanted to do. And he wanted to do something else. So I started managing the Issachar Fund. And I was, basically doing what I'd always been doing since 1990. But they changed some of the rules, and basically I couldn't manage mutual funds anymore. I had to pick individual stocks. And anyway, long story short, I was at a Kingdom Advisor conference, and a guy asked me, he said, "Are you a Christian?" I said, "Sure." He said, "Are you a money manager?" I said, "Sure." He said, "Are you a Christian money manager?" And I said, "Well, yeah." And he said, "Well, why isn't your fund a BRI fund?" And then he basically walked away. And I'm like, "Oh my God, something just happened here." I didn't know what it was, but a little while later, I learned what a BRI fund was, and basically, it's just honoring God with your investments. That's all it is. Okay. And this guy developed a tool that basically you type in the symbol of a company and it'll tell you if it's BRI compliant or not. So anyway, I basically, in 2020, I basically changed everything that I was doing before, and I went to strictly BRI, and I started picking individual stocks. Well, I didn't know much about stock picking. I knew a lot about mutual fund picking. So I said, well, let me find the best available stock picking software system that I can find. And I researched it. And you probably heard the guy, his name is William O'Neill. He founded Investors Business Daily. And he studied back in the 50s and 60s the best mutual funds and what made them so successful. And long story short, he came up with an acronym called CAN-SLIM. And it basically, if I had to ball it up into one little thing, it was like, if you find a company that makes a lot of widgets and they're making a lot of profits making those widgets, hey, investors want to invest in those companies. So that's what CanSlim is all about. It's finding companies that have accelerating sales and accelerating earnings and a few other fundamental criteria and technical chart patterns that they look for. It's a system. Anyway, it's the best system that I've found available. And I started using that in 2020 and had a great year. 2020 was the COVID year, and obviously the Feds just stepped on the gas and started printing money like it was crazy, and we had a great year. And then 2021, I didn't really understand the system that well, and I didn't get out in enough time, and I kind of wrote some stocks down, and that was a painful lesson to learn. So I was down for that year for maybe around, I don't know, about 10% for that year, for the next year. And that was a lesson that I learned really, really hard, that, hey, you've got to manage that risk. You can't let those stocks that are losing money get away from you. So I've been studying the system really, really hard, and it takes about 4 to 5 years to really master the CanSlim system. So I'm basically in the 5th year of mastering it, and I really believe that I've finally figured out why it works and how it works and how I can make it work for me and my clients, my shareholders.
Nice. Well, I mean, yeah, risk management inside of a mutual fund versus stocks is a whole different game. I mean, it really is. I don't even really think you can apply the thinking from one to the other. Low volatility mutual fund investing has its own whole system to it. And then you try to do it with stocks and you just don't get the same results. It's tough. So
that's right.
I understand.
You're right. You're right. It is a different ball game when you're picking individual mutual funds that have good day-to-day serial correlations, and you go to stocks and try to find those serial correlations. They don't exist, or they might exist for a little while, but then just as soon as you buy them, then it goes in the opposite direction, and you lose a bunch of money. So that system doesn't apply to individual stocks. You really have to have a little bit more tolerance for risk when you're investing with stocks.
Oh yeah, no, for sure. And risk management becomes a whole different thing.
Absolutely.
On the BRI, sorry, go ahead.
I firmly believe, and I will go to my grave believing that risk management and position sizing are the two most important things that you can ever do, is manage your risk and then manage your position size. Those are the two critical things that I focus on.
Oh, absolutely. Absolutely. And to go back to the BRI, so is there like a qualification? Does somebody review what you do, the holdings, or you just kind of so somebody does review your fund to make sure?
Yes, my board.
Okay.
I have the mutual fund has a trust, and the trust have 12 people, mostly retired, a lot of attorneys, a lot of business people. And they basically, when I went to them and told them that I wanted to switch from non-BRI to BRI, I said, "Have you lost your mind?" It's like, "No, I believe, God has changed my heart, and this is what I want to do." And it's like, "Okay, we don't know if anybody has ever done that before." Well, I believe it's the right thing, and that's what I want to do. So anyway, they said, "Okay, well, how are you going to do it? How are you going to prove that it's BRI?" I said, "Well, there's a company called Inspire, and they wrote a program that's a third-party program. And basically, you type in the symbol, and it tells you immediately if it's BRI compliant. So it's a third-party company that they do all the work, and they basically screen out, the bad actors, tobacco, alcohol, pornography, sex trafficking, things like that. They just abortion. They clean that all out, so you don't. Basically, they score it from 0 to 100, and then zero to negative 100. And they give each company a score. And according to my prospectus, I can't invest in a company I can only invest in a company from 0 to 100. So every trade that I make has to clear compliance to make sure that I'm complying with what I say I'm going to do in my prospectus. So they're watching over every trade that I make, basically.
Right. That's a lot to deal with. So.
Yep.
Nice.
But it's easy. It's a process that I've developed, and it's very easy. I mean, it's a free website. Anyone can go to it.
Okay.
So anyway.
No, that's great. So is there like a certification? So they do review?
No, there's no certification. It's just biblical responsible investing was started by a guy named Art Alley and a couple other guys probably 30 years ago. And they basically coined the phrase biblical responsible investing. And Art Alley is the founder of the Timothy funds. You might have heard of Timothy funds.
Yes. Yeah.
They're all BRI funds. So they were kind of like the first funds in the business. And they have ETFs also. There are a few other companies like Inspire. Inspire has a bunch of ETFs that are BRI compliant. So.
Right. Okay, so there's a lot to it, yeah, and that's
Yeah.
that's really another version of the um, not DEI, but the other thing that was popular years ago, and it's really kind of not
Oh, ESG.
ESG. Sorry, thank you very
Yeah,
much.
it's totally different. But I know what you're saying. ESG is environmental, social, and governance, and
There
that's
it is.
just,
Yes.
yeah, it's
Yeah.
totally different from BRI. BRI is a morally value responsible investing system versus ESG. It's environmental, social, and governance. And I don't know. It has a bad name now, ESG. So if you mention that ESG, um, people basically run away from you.
It does, and I think it's interesting that years ago it really got pushed on the industry by,
Mm.
I don't even know where it came from, but we kept hearing, oh, if you're not talking to this with your clients, somebody else is. I'm like, nobody's talking about this. Nobody cares,
Yeah.
and it doesn't work very well. So I always think it's interesting, but I think what you guys do is a little bit different. I think it makes more sense in a lot of ways. I think there's still really good companies that adhere to these kind of guidelines. So I think your universe of investing is probably still very good.
Oh, absolutely. Yeah. There's only about probably in total universe is about, I'd say 8% of the stocks that I can't invest in.
Mhm.
Because they clearly violate biblical principles. But interesting, you mentioned ESG. Larry Fink, I believe, is the one who started it, and he's the manager of BlackRock, who manages, I don't know, 12, $13 trillion. So he was pushing that really hard, and it bankrupted a lot of countries and companies. So it's got a bad connotation. So yeah, you don't mention ESG anymore, people will run away from you.
No, I appreciate the insights and the differentiation and understanding that there are a lot of different ways to think about investing.
Yeah.
And there are so many stocks out there. There's plenty to pick from if you're only cutting out
Yeah.
8%.
Yeah, and funny, just a little side bit. The guy Robert Netsley, who founded Inspire, he was the one that I saw at the Kingdom Advisor Conference, and he said yes, you can use my software. But interesting, this was in 2020,
Mhm.
and he had like I'm doing this from memory, probably maybe 50 million in AUM at the time.
Mhm.
He's got over 3 billion now.
Wow.
$3 billion.
Uh-huh.
It's crazy. God is just blessing that industry and blessing his company, and
Right.
it's phenomenal. I've never seen any kind of growth like that ever in my 35 years of managing money. It's
Mhm.
just from 50 million to 3 billion in 5 years. It's just phenomenal.
It is.
But
There's definitely a want for this type of
yes,
investing and not so much
yes,
the other. I think that's
right,
fascinating, and I like to see niches like that really play out and pay off for the advisors of the managers
absolutely.
of these funds. So yeah, so let's dive into the process a little bit. You want to talk about I know it's O'Neill, it's the Can Slim system a little bit. Just talk about your investment process. How do you go through picking funds? What do you like to think about?
Okay. Well, basically, I have a theme, a thematic. My pastor, little background, how I came up with the name Issachar. My pastor told me that I have the gift of understanding, because and I should name the fund Issachar. And I said, "What's an Issachar?" And he said, "Well, the sons of Issachar in the Bible, in the Old Testament, they were one of the 12 tribes." And he said they were known for their understanding. You should call the fund the Issachar Fund. I said, "Okay, great." I said, "What's the symbol?" He said, "Well, Jesus is the Lion of Judah, so you want to honor Jesus, right?" I said, "Yeah, sure." So that's how we came up with the symbol, Lion X, Lionx, and the fund is Issachar. So anyway, with that understanding gift, I like to be able to understand why stocks are going up and what makes them go up. So right now, if I step back and I look at the market and I say, well, why is the market going, or why has the market gone up in the last 3 decades? Well, I can trace it back to liquidity and credit. Well, the Fed was created back in 1913, whatever it was, and they basically got the license to print money. And ever since they started printing money, or ever since we came off the gold standard in 1971, they've been printing money like crazy, and they have bailed the stock market out of every crisis that I can remember. Every crisis. So, even the one like right now, you say, well, how is the Fed going to bail the market out of this crisis? Well, they can, and they probably will try to lower rates, or they will try to print a lot of money. Well, the difference this time is that we have inflation. So if they print any more money, create more liquidity, they will create more inflation, which will cripple or hurt the lower end of the population. So they have to keep that in mind. So I think this situation that we're in right now, it may be a stagflationary period where inflation goes up and growth declines. It certainly feels that way right now. And I've been saying that for months now in my blog. I've been talking about stagflation. And I think we're starting to see that right now. So anyway, with that in the background, I look at individual stocks and I'm looking for, well, maybe I can share a screen. How about that?
Yeah, absolutely. Absolutely.
Okay.
Visuals are fun. So yeah, go for it.
Okay. Right. Just for the record, right now, can you see my my screen?
Look, physical gold.
Right. That was the stock that I mean, the ETF that I did own for the last 4 weeks. I've been basically the CANSUM system basically pushed me out of all the existing stocks that I was holding on to. All the we call the leaders. The leaders were sold, and I was left with physical gold and physical silver, where I sold my silver yesterday because the market just wasn't rewarding me for taking the risk. Yep. And then as of this morning, I sold my gold. So as of this morning, I'm 100% in cash. I had 15% in gold coming into today. So I'm 100% in cash right now. And I'm not going to go back into the market until we get what IBD or Investors Business Daily or William O'Neill, the CANSUM system, what they call a follow-through day. If I just look at the SPY, okay. A follow-through day basically is after the market makes a bottom, like let's just say back over here, an 8/6 of 24. You have to wait 4 days for the market to have a follow-through day, and a follow-through day is basically if you look at this right here, was a follow-through day on 8/8. Basically, it's a index gain on the S&P 500 or the Nasdaq of 1.2% or more on greater volume than the previous day. So that just means that big money's coming in the market, and you should find something to buy. So not every follow-through day is successful, obviously, because there's no system that's perfect. But every follow-through day was preceded, excuse me, every bull market was preceded with a follow-through day. So that's what William O'Neill found in his study over the last 50 years. So everyone who follows the CANSUM system is waiting for that follow-through day. We're only 4 days away from a follow-through day. So like if we got a bounce on Monday, that would not be a follow-through day. That would just be the first day in a market bottom. So anyway, I couldn't buy anything for at least 4 days from now. So if in this period, when you're in a market sell-off or a correction or bear market, whatever you want to call it, you always have to keep your buy list fresh. So you always have stocks that you're looking at that you want to buy after a follow-through day. If I had to pick 2 stocks right now that I thought would be the next leaders in the next bull market, now when that will be, I don't know. It would be Palantir and Credo. My number one favorite stock would be Palantir because this guy, Alex Karp, I don't know if you've ever seen him, but he's got the guy with the wild hair. He's kind of like Elon Musk. He's a brilliant multi-billionaire, and he runs Palantir, and it's a software company that basically sells software to government to make the government more efficient. So it's perfect for what Doge is trying to do, is make the government more efficient and more productive. So if you just look at the fundamentals of Palantir for the last, well, as far as I can see, all these quarters, they've been increasing their earnings for the double digits for the last 8 quarters. And then the next 4 quarters going forward, they're expecting 62%, 47%, 39%, and 15% earnings gains or percent gains. And they expect to increase their sales 36, 33, 31, and 28. So this is what I look for in a stock that I'm interested in buying, because it has the fundamentals. And another thing I look at, the PE ratio. It's got 200. The PE ratio is 204. the 5-year range for the PE has been 53 to 304. So it's not in the upper end. It's in the middle of the range. So it has some room to go. The forward PE is 137. I always want my forward PE to be less than my current PE. Management owns 6% of it. No debt. Cash flow is 44 cents, and it's supposed to earn 54 cents. So it's got great cash flow. In my opinion, it's a great potential, fundamentally sound stock when the market bottoms. That's going to be one of my go-to stocks. Credo's another one. Same similar fundamentals. If you look at the fundamentals, it's incredible. Triple digits earnings gains, triple digits estimates going forward, triple digit sales going forward. So it's like it's got everything that a great market leader, according to William O'Neill, has right before it continues to make phenomenal gains. So these two stocks are right at the top of my list. The number 3 stock that I'm looking at is Bellray Brands. This company sells protein shakes and bars, protein drinks and stuff. And I think the reason why it's doing so well is because of Lilly. They have that weight loss drug that you basically lose a bunch of weight, but it also burns a lot of fat. Well, in order to stop the burning of the fat, you have to drink a lot of protein. So I think Bellray Brands is one of the reasons why this stock has been going up. So it's kind of one of my stocks, my third most favorite stock once we get a follow through date. And then
I have not heard of this one. That's fascinating. It's not one I've ever even heard of.
Yeah, it's crazy. And what technically speaking, you see this blue dot, they call this a blue dot, and it's got a relative strength of 89, and it's a blue dot, which means it made a relative strength new high. So out of all the stocks in the database, this one's ranked 89 out of 99. So it is the relative strength is in a new high. So if you look back at this relative strength line, this blue line, it's at a new high. So this stock is outperforming the database of over 5,000 stocks.
Oh, wow. So the whole universe is what it's looking at for the relative strength. Okay.
Yeah. So that blue dot means a lot to people that are in the CanSlim system.
Oh, sure. No, that's fascinating because that means it's probably not getting hit as much as other stocks today. I don't know what today's down was.
That's right. Well, today it's down 5.3% for the day. Yeah. But if you look at in the last, 3 weeks, it's been under accumulation. Another thing that I like to look at is the institutional ownership. This is the IBD Mutual Fund Index ownership. William O'Neill sells a system called Wanda, and he sells a service to the institutions like Fidelity, Invesco, Allspring, all the big firms. They subscribe to his database, and he says that he basically has like 20, 30 mutual funds that he's identified in his IBD Mutual Fund Index ownership. So this stock, Bellray Brands, has 3 funds in his universe. And what's interesting is look at Fidelity Contra Fund, which is great. Yeah. Jeff, I mean, he's doing an incredible job. Yeah. But notice how in March they added or they took a new position. So usually when Fidelity takes a new position, they don't turn around and sell it the next day. They usually add to it if it's successful for them. So I like that in Bellray Brands.
That's very cool. Cool information and good funds there.
Yeah. So those are my 3 go-to stocks once we get a follow through day. But once we get a follow through day, I will do a screen right here. I'll say, show me all the stocks that are going up on volume today. Well, actually, there's only one of them. So there wasn't much action today. In other words, institutions accumulating stock. So basically, I mean, I couldn't find anything except for one stock. And let's see what it is. PFSI. Yes. It's finance. So I guess they make money by people charging their credit cards, and they're going to make money on people. Wow. I guess. Yeah. So that's the only thing that popped up on my screen. So my point is, once we get a follow through date, then I will run this screen and I will look for stocks that are under accumulation by institutions. So that's what I'm looking for.
That's wild to see, and especially on a day where today it seemed like we're kind of in like day 2 of a very big sell off. Well, really day 3 of from the tariffs. Well, sorry, 2 days because it was actually after the close on Wednesday. But today, all the stuff that all the stocks and names and sectors that were holding up well got hit just as bad. It was really odd. So it's neat to see something went up today, or it's not all it's not all bad news across the board.
Yeah.
And as you said earlier, gold and silver both just got clobbered today.
Yeah.
I'm not really sure what's up with that.
The only thing, I think what's happening is people are getting margin calls and they're having to sell. It's forced selling. And not only that, when we go into a panic type puke market, when the market's just investors are just puking, the short sellers hit everything.
Yeah.
And when there's no stock that's left unharmed when we go through this kind of selling. So I think they're hitting gold because people were hiding in gold. I mean, the only thing that I found that was attractive was treasury bonds. I mean, 20-year treasury bonds were up 1% today.
Yeah.
But it finished at the low of the day. So it's huge volume. You see, look at the volume. 66 million shares of TLT were traded today. So that tells me money was hiding in treasury bonds. And then if you look at junk bonds as another indicator of risk on, risk off, they crushed junk bonds today, down 1.5%. So, and then yesterday was down 1.4%. So junk bonds have fallen through the 50-day and 200-day moving average. So that's a risk off environment as far as I'm concerned. You just got to stay away. You can't. I'm not going to play in that. I'm not going to try to catch a falling knife in junk bonds right here.
Right. No, and even the case, if junk bonds are only down 1.5, I mean, the market was down 5-6%, depending on what market we're looking at today. That's just wild.
Yeah, the SP 500 was down SPY was down 5.85% today. So we're at that 500, I think, level of support. If you go back to, I see 493 was support, 510 was support. Well, we are at 500, 510, 493. So we're at a point where the institutions should come in and support. Now, if they don't, then that tells me that we have some more severe pain to go on the downside. One thing that I did notice was, I don't buy into this, but I bit Bitcoin. Bitcoin was up today, 2.4%. So, that tells me that maybe people are hiding in Bitcoin. I don't understand it. First of all, I can't invest in it, so I have a conflict of, I have a bias there. Since I can't invest in it, then I'm probably going to be against it. So you can take what I say with a grain of salt, but it's like I only invest in things that I shouldn't say only, but I try to invest in things that have earnings and sales. And Bitcoin does not have earnings and sales, and you can create it out of thin air, and it's not backed by anything. So it's like just like our dollar, it's created out of thin air and not backed by anything. So how can I trust it? So anyway, I think what's happening in gold, though, I think central banks around the world are hoarding gold, and I may sound crazy if I'm saying this, but I think they're hoarding gold because they know, these central banks know that their currency, their fiat currency, is trash, and they know that eventually the world and their investors, their citizens, will demand something that's going to be backed besides the government's ability to tax its people. And that would be gold. I think gold that's why central banks are hoarding it, so they can start a new currency backed by gold.
That's fair. That's fair. Wow.
That's what I believe.
No, good insights there. Really appreciate it. Well, we're kind of coming up to the end here, so I got to ask, do you have a favorite investment quote or quote that drives your thinking?
Absolutely. My quote, and it's on my website, lionx.net. It's whatever you do, do it all for the glory of God. It's 1 Corinthians 10:31. That's my verse that I live by, and I just say, whatever I do, do it all for the glory of God, because every breath in my lung, every thought that I have, is all by the grace of God. So that's what I believe.
Love it. Staying true to your fund's mission. So I love that.
Absolutely. My convictions. I have strong convictions, and I love the stock market, and I love learning more about God's grace. That's the two things I'm passionate about.
Fantastic. Well, thanks for being here today. I don't believe you're going to be at the Uncommon Knowledge Conference coming up on May 4th through 7th in Costa Mesa, California.
Nope, I will not.
Sad to not see you. It's always fun to hang out with you in person. I've known you for years, and Dexter's a great guy. I got to say, definitely people should check out your fund. So.
Yeah, well, thank you. This has been the first year that I haven't gone, and well, I was actually a safety member back in the early 90s. And this is the first year that I didn't rejoin because I was faced with an option. Should I take my wife to Europe or should I go to the NAAIM conference? And my wife won.
That's fair. I hope to see you again next year at some point in the future.
Yes,
It's always great talking to you. So thanks for being here today.